What is the magic number for retirement? How much do you need to have saved to be successful? The market volatility seems to be never stopping, and 4 questions that retirees need to ask themselves about their investment allocations. All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them at Elevated Financial Management right here in Seattle. 42 years combined experience between these two, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick. My pleasure to jump on and talk retirement with both Mark and Casey each and every week. And before we dive into magic numbers, gentlemen, start with you, Casey. How was your week?
Oh, it's been great. It's always a good week. We're had some nice weather again recently, which is great. A couple rainy days in there, but I'd think we weren't at home if there wasn't a rainy day or two in there. So, doing good. The Mariners are heating up, which we're really excited about. To see the team play better. That's always exciting. And we've had a really nice week. A number of new folks here. And, it's always exciting. Like, we talk about this a lot, and maybe we can just pause for a second and say thanks. It's a privilege for us to be able to help the folks that we get to help. We get to see, we play a little part. The reality is that the clients do the hard work. They've saved, they've worked hard to be where they're at. But we get to play a little part to help them be successful in retirement. And that's really, that's exciting for us, right? It makes us feel good too. And, it's something that we're really proud of.
Yeah. In fact, we have a pretty nice, office mantra, you might say, that we truly want to help good people make awesome decisions so that they can really enjoy an awesome retirement, right? That's the bottom line of what we do here. And so to see these come to fruition, had some really nice appointments this week. And again, like Casey just mentioned, we want to thank the listeners so very much because it is a privilege. It's an honor to be able to help someone make their retirement dreams come true, because it's not an easy thing to do in today's market, in today's world, trying to figure everything out. In fact, I had a client last night trying to get their Social Security turned on, and we were doing it, but then she realized her savings history was messed up, and she wants to try and correct it, but the problem is she's got to go back like 28 years.
Oh, my gosh.
But it may be worth it because we know Social Security planning, they use the 35 highest earning years. And so she had a bunch of zeros in the 90s that she is going to dispute. But it would have been a little easier had she done this before yesterday.
Yeah, that's going to be hard to prove at this stage. Yeah.
Mm-hmm. That's it. So, again, there's so much to this. And we just want to, again, thank our listeners for giving us an opportunity to help them fulfill their retirement dreams.
I tell you, we talk about it each and every week here on Elevate Your Wealth. It's about, finding your purpose as you're heading towards retirement. But you can hear it from both Mark and Casey. Their purpose, they're here to help and to help you navigate to and through retirement. And there's so many stumbling blocks that are out there. And why wouldn't you want to take the opportunity to avoid those, right? To have a plan. And what we'll do here on the program, we do this each and every week, we do open up a certain number of appointments with the firm, and they are complimentary. And you can see if you're on track for retirement. A lot of you are sitting on portfolios and have not even thought about the planning process, and you really need to do so. And there are just as many of you that are working at this, and you are trying to get this plan together, but you're a little frustrated. It's okay. You can get a second opinion. We'll tell you how to do that as we move through the program. And what I love about this particular show and these particular guys is they go and they find, the cutting edge articles that people are talking about, and we get to talk about them. And we're going to start with this one, guys. This is America's magic number for retirement, and it's lower this year. And you grab this, Jessica Hall, Market Watch.
Yeah, this is pretty interesting. I was surprised that the number had lowered, but as we read the article, it does actually start to make sense as to potentially why it is lower. But these articles always catch our attention simply because I think that a lot of times they can be deceiving, right?
Yeah.
It puts this number out there that this is how much I need to retire. Well, that's implying that we all have the same exact circumstance, and we don't, right? So I think it's a really complicated thing to try and put that kind of number to it. So just to kind of give a couple highlights, and then we'll bounce back and forth and talk more about this. But the magic number, quote unquote, right? You can't see me, but the quote unquote magic number Americans think they need to retire comfortably dropped to $1.26 million, down $200,000 from last year's. And this is the key word, guesstimate. That's what it says in the article. But that remains well above what most people have actually saved for their golden years. So even though that number is down, it's still much higher than what people have actually saved. So there is this big gap between what people think they're going to need and what they actually have. And the article actually goes on to talk more about that. And again, why this catches our attention is simply that that's a lot of what we're doing, is trying to help folks figure out how they can make the money that they have last through their retirement. Because that's the biggest concern folks have, right, Mark, is am I going to outlive my money? And realistically, you want your money to outlast you. But that's a fine line to walk, right? And it takes very specific type of planning to make sure that you're going to be successful.
Yeah, in fact, the article highlighted how that right now they said this number that you need to replace 80% of your income, and that's what you want to have each year in retirement, right? We like it to be closer to 100%.
Yeah.
So, but everybody's situation, as Casey just mentioned, is so totally different. What if you don't have a mortgage, or you do have a mortgage? That's going to take more of that income then to make payments. So if you carry a lot of debt into retirement, that's got to be accounted for, right? So everybody's situation is very, very unique to them. And some people, Casey just mentioned 1.26. A lot of people think if they hit the $1 million number, that's going to be all that they need, right? And we know that is absolutely not the case, because the problem is pensions have become a thing of the past for most people. If you work for the federal government, state government, city governments, you can still have pensions, right? But I think about Boeing. That the strike happened recently, and they wanted the pension back, but Boeing was never going to concede. They're never going to give that back. And so not having a pension, and all you're going to have really is Social Security, and hopefully you've saved money in these qualified plans that you can turn some kind of a private pension on to create the income to fill the gap that you're going to need once the paycheck stops.
Right, and that's really it, right? It has to be conditionally based on your individual circumstance. That's why these type of articles are so complicated, because it puts this fictitious number out there that for a number of people might be accurate, right? 1.26 might be the right number for you. I don't know. But you know what? You might only need $1 million, depending on what your potential income needs are. You might need 800,000. You might need 4.6 million. I have no idea. It's really dependent on how much income you're looking for in retirement, what your debt is, like Mark talked about. If you pay your house off right before you go into retirement, well, then 80% of your income while you were working might be accurate. That might work for you, because the net into your life might end up being roughly the same. But most people aren't looking for a lifestyle cut when they retire. If anything, now's the time to live it up, right? So you might need more income in retirement. And as you said, Mark, right, with pensions and things like that, gosh, if you have a pension, well, maybe you don't need to save as much, right? So this 1.26 might be high for you. We had a gentleman come in that was a firefighter. Or he was law enforcement actually for a number of years, and then a firefighter for quite a few years after that. And he's got a huge pension, one of the biggest ones we've ever seen. But he sacrificed and worked hard and lots of overtime to get that. And so for him, he doesn't actually need as much saved as somebody else would, because he's got this massive pension. Now, in his circumstance, he still has a tremendous amount saved and has done a great job. So he's kind of covered from both fronts. But the point remains the same. It's very circumstantial. It's very individual to you, and your plan needs to reflect that.
One of the things I just want to add of this article that I agree 100% with is it's a tremendous high amount of Americans, they have not saved enough. That's really the bottom line.
It is, yeah.
If you don't have enough money, you're not going to be able to create the income that you need, and it's creating a lot of anxiety out there because people, I think, are realizing I haven't done a good job in this regard. So our goal is how can we help them to do that and then to make that retirement successful.
Yeah, I mean, you think about it. In the article, it says, 51% of Americans think it's somewhat very unlikely that they might, or I should say likely, they're going to outlive their money.
Right.
So thinking is not knowing. Why wouldn't you want to know? Have a plan. Now, we've got an opportunity for you right now to get on the calendar with Elevated Financial Management. Mark, walk us through these appointments again. They are complimentary.
Yeah, so please, if you are, getting ready to retire, you've saved up $250,000 or more, please give us a call because as we just talked about, maybe you're not sure about how long your money's going to last, where your income is going to come from. What about taxes? What are you doing to figure that out? That's one of the things we really excel at here is our tax planning piece. And so please pick up the phone. All we want to do is have a conversation. Leave your checkbook at home, but please come and see us. Let us help you put together a plan that's going to make your retirement successful and last.
Complimentary appointment awaits. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call this number now. Again, leaving the checkbook at home, 866-668-3625. That's 866-668-3625. We'll be back with more Elevate Your Wealth, moving clients beyond market volatility. Boy, we've had a lot of that lately. We'll talk about it next. Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. You can find them right here in Seattle at Elevated Financial Management. Check out the website. It's a nice resource for you, efmnw.com. All letters, efmnw.com. Links to the TV show. Our radio shows are in podcast form there as well. And between Mark and Casey, 42 years combined experience in the retirement planning business, helping their clients get to and through retirement. They are certified financial fiduciaries. And I'm Morgan Patrick, and we hit the latest articles out there when it comes to retirement. You're going to have questions about your own situation, and we give you an opportunity to take action on your own behalf. We have complimentary appointments. You can grab one at any time during the course of this show by calling 866-668-3625. And what does complimentary mean? It means free. It means you leave the checkbook at home. It means you're not agreeing to become a client. It means they're not agreeing to take you as a client. This is a test drive. 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And again, it's all about having the plan. 866-668-3625. So moving clients beyond the market volatility. And I tell you, the last, 3-4 weeks, we've talked about it already on the show. It has been an absolute roller coaster. Guys, how do you move your clients past that? I mean, it's hard not to stare at it.
Yeah, I was just thinking we are. There's been most of our clients are not calling because they have a plan, right? Mm-hmm. They're very. I don't want to say relaxed. Sure, everybody looks at the clickbait and all these negative articles.
They're confident in their plan.
Exactly. That's just it. They know that they don't have to worry about this volatility like others that don't have a plan, and everything that they have for retirement from a fund standpoint is all connected to the market. Now that can cause a lot of anxiety, and it is for a lot of people. But I think what we're trying to do with clients is everything we do is purpose-driven. Casey does a nice job of helping clients to appreciate that. And you've got to stay focused on certain long-term goals, intermediate goals, and short-term goals. And we have buckets that we talk about, yellow, green, red. And if we have money that's designed where we can reach into when the market is doing different things, it takes so much of the pressure off, right? They're not having to sell a mutual fund or a
Right.
stock at the wrong time to create income, right? They have a plan. And right now with the tariff war that's being talked about, you're right. We're finding out who wants to play chicken, right? Because Trump is doing his thing with China right now, and China's saying, okay, we'll do the exact same thing then. And right now, that hasn't really slowed down very much. And yet, I think both countries know how much they truly need each other. So who's going to blink first? But again, with a plan, we don't have to worry about the tariff wars. Now, it's going to affect inflation, of course, which, that does affect all of us, no matter if we got a great income source or we don't. But again, if we've got a plan, it's going to help take so much of the reservation and the anxiety away, knowing that you're not going to, be out of money in a short amount of time. And we talk about sequence of return risk. And again, this is important to talk about because people need to realize we can help control this not market angst, you might say, but the concern people have if you have a plan.
Right, it does. It takes a plan. And like you said, I think really what it is, what people feel, and that it just maybe not self-aware enough to recognize it, but that anxiety that you're feeling is because you see that the majority of your investments are in the stock market. That's where most people are, is in the stock market. And these types of issues that we're experiencing right now affect both the stocks and the bonds, right? And so in that circumstance, it becomes vastly more complicated, and you feel this uncertainty. And really, again, we've talked about this before, maybe even just last week or a couple weeks ago, but it's that boogeyman in the closet, right?
Yeah.
It's just the unknown, right? That's really what it is. And if your advisor's not helping calm those fears by showing you, not just telling you, right? That this is very, very key. Not just telling you, hey, it's okay, it's just a paper loss, but actually showing you that you can still be successful, and this is how you're going to be successful, and this is how it works. If they're not helping you with that, then I'm not quite sure. I'm not quite sure why they're your advisor, right?
Yeah,
If I can just
what
say it,
role
right?
are they playing?
Yeah, what role are
Yeah.
they really playing? Because that's what your advisor should be doing, right? That's the whole purpose. I mean, think about that term, advisor. This is the person that you go to when you have questions, when you feel uncertainty.
There's
when you're
interaction,
concerned.
right?
Exactly.
There's interaction.
And so if the interaction is simply, hey, it's going to be okay, that's not really advising, right? That's just trying to smooth things over. But you need something to found that on. You need something to show you that it's going to be okay. Yeah. And that's what the plan is, right? Now, the advisor helps put the plan together, explain it, talk through it, manage it, all those things. But it really takes more than just some soothing words, right? And so there's a couple other things that come with this, right? There's a number of other potential changes in the future, and the article makes this point. If we talk about the TCJA, right, the Tax Cuts and Jobs Act, right now that's set to, or that's supposed to sunset, I should say, at the end of this year, at the end of 2025. And if that is the case, taxes could increase, according to this article, for 62% of Americans. And that comes from the Tax Foundation, actually. So that's a big thing, right? And really, we're talking about tariffs. We're talking about changes. The current administration wants to change Social Security and change a lot of the spending in the government. We've got the TCJA. We've got tax conversations. There is a storm of different things happening right now, and it is freaking people out. And we understand why. Because if you are simply sitting and watching your 401k lose money, it doesn't feel good when all these other things are happening. It never feels good in the first place, but there is a lot happening all at once, and it's freaking people out, and we get it. And that is, again, why we always come back. And you know what? If you listen to our show regularly, you might think that at times we sound like a broken record because we're constantly preaching a plan, but this is exactly why, for this exact circumstance. And I can say that if you went back to 2000 or 2008 or back to COVID, the people that had plans when those events happened would not have been feeling the same things that the people who don't have a plan feel, right? And that's exactly why we always talk about it.
Well, think about this, guys. We talk about it, I mean, every week. It's the unknown. It's the uncertainty. That's the fear. not knowing if your money is going to last you. The number one fear is running out of money in retirement. So not having funds to get you to and through retirement, that's the fear. Not having a plan, that's like, what's the example I use? Like if you're going on a trip and you don't have a gas gauge, you don't know how much gas you have in your tank.
Yeah, that's a problem.
That's a problem. I mean, you are hoping you get to your destination. Same thing goes for planning. If you're just sitting on a portfolio, you're hoping that portfolio is going to be able to financially get you to and through retirement. You don't know. Having a plan, you have structure. Having a plan, you have confidence.
Yep. In fact, this article really, I think this was such a good point, is that we need to be sitting down with our clients and going over their short, I mentioned this earlier, medium and long-term goals. And it's like it says, do they want to buy a house? We had a client talk to us this morning about wanting to possibly buy a house down in Arizona. What's the best way to do it? What bucket should they take the money out of? He thought it might be interested in going into his IRA to do that. And we're like, oh, no, I don't think that would be the best place to go because of the tax ramifications, especially for a short-term fix, because he's going to pay the house off when he sells his other house here. So again, maybe you want to buy a house. Do you want to fund maybe grandchildren's education? What about continuing to save for your retirement? So all these goals are what we want to help our clients think about and move toward them. We want to keep everybody kind of in a forward motion, right, a little bit. We don't want them to, because what happens if we don't understand something, right? It's like a deer in the headlights. That's why they literally freeze, and they'll get hit by the vehicle that's been approaching for a mile, right? Because they don't want to do anything. So again, we want our clients to be able to take action when needed.
Yeah, you don't want to be a deer in the headlights when it comes to your money and your retirement.
Yep.
The opportunity to get on the calendar with Elevated Financial Management right here in Seattle, well, it's right now. Casey, walk us through these appointments.
Well, this is an opportunity for you to get a written financial plan. That's what we talk about week after week, because we see that that's what creates success and confidence in retirement. And that's really what this is all about. So it's really about a custom tailored plan, looking at the investments that you have, how you potentially could make some adjustments to those if it's appropriate, really what your goals are. This is what makes it a custom tailored plan, is talking about your specific goals and what you want to accomplish in retirement. We'll talk, like I said, about the risks that you're taking, what taxes you're going to be paying. Is there a way to lessen those taxes? We'll talk about Medicare, long-term care, Social Security. Don't hesitate. Pick up the phone. Give us a call.
That's it, folks. The door is open. Opportunity right now. Call 866-668-3625. These are complimentary appointments. Again, that's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And folks, you will walk out with a written financial plan. You'll have an idea of where you are with your planning or lack thereof. This is an opportunity. 866-668-3625. These appointments go fast. Don't hesitate. Call now and get on the calendar with Elevated Financial Management. And again, there's no cost to it. You're not agreeing to become a client. This is an opportunity for you to test drive. 866-668-3625. We've got more Elevate Your Wealth on the other side. We'll go Wall Street coming up. Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. You can find them right here in Seattle at Elevated Financial Management. 42 years combined experience between these two, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries. We talk about it each and every week, the importance of having a plan. And we're going to give you an opportunity to get on their calendar at no cost, no obligation. So stay tuned for that. I'm Morgan Patrick. Again, it's always an entertaining, educational conversation when it comes to retirement, being ready for it. And so many of you are sitting out there on portfolios. You've saved really, really well, but you're probably, let's just say you're in that 15 to 10-year window from retiring. And the portfolio is not a plan. We talk about it each and every week. There's an opportunity to get rolling on the planning. there's an opportunity for a second opinion if you're halfway down the path. So stay tuned. We'll open up those appointments. And as we always do, we hit these articles, and they do grab your attention. This next one from Bloomberg: Wall Street faces its ultimate enemy, uncertainty. Guys, I mean, this is what everybody's talking about.
It is, yeah. And, I want to make kind of maybe a quick comparison here. If you look at the market every time there's an election year, typically leading up to that election, the market is quite volatile, more than it had been, prior. And so we see that every 4 years, right? That kind of happens like clockwork. It can be expected. But historically, what is shown is that the market is not necessarily too concerned with which side becomes president or who becomes president. It's more so that there is a president, right? And so, again, it's that uncertainty of who's it going to be that creates that volatility. And we're seeing something similar right now. It's for a different reason, but it's that uncertainty that creates the volatility, right? Mm-hmm. And in theory, the market is future, future facing, forward facing. So it's that uncertainty of what is it going to look like 6 months from now or a year from now that creates the volatility that we're experiencing. And so that's really the key, is that same thing, that volatility that we're experiencing is because of the uncertainty. The volatility that you might be experiencing in your emotions and how you're viewing your retirement and your investments is because of uncertainty, right? That's really what it is. You are uncertain about your plan. You are uncertain about how these things affect you. You are uncertain of what the tariffs will do, what this will do, what that will do. And because of that, that makes that anxiety level rise, right? And so that's really the key here, is we want to focus in on how you can create certainty in your life despite what's going on in the market or overall.
Well, we were just talking a little bit about companies a little bit, and I just love that. So the true, and Casey hit this on the head, the enemy of investment or hiring, mergers or acquisitions is uncertainty. And so even though I like this article mentioned that the first quarter, boy, especially the big investment banks, they're record profits right now. Everybody's looking good for this first quarter, but they're worried about the next 3 quarters, right? Because if this uncertainty continues and this tariff war continues, companies are going to be stepping back. They're not going to be doing things that they probably would have, and that's going to create a problem, right? And we all know it could be a domino effect. And we look at, that's exactly what happened during COVID and the financial crisis in 2007, late 7 and 8. So again, if this uncertainty continues, I think the market is still going to be in for a bumpy ride, and it's going to really affect negatively those that are getting ready for retirement. They're on that runway, right? 5 years prior, or maybe 5 years after you retire. This kind of volatility is not good for anybody.
Mm-hmm. Well, and we talk about it all the time, guys. Having that plan gives you that confidence as you're moving to and through retirement, and it doesn't happen in a vacuum. So the market's going to do what the market's going to do. And right now, it's kind of unprecedented what we're seeing with the tariffs, the counter tariffs, the pauses. We really don't know what's going to happen. And in the last several weeks, really, really big names in finance have come out. J.P. Morgan Chase, Jamie Dimon, he's basically saying, we don't know. We need to sit and almost hit the pause button for at least 2 months just to see how this works out, because we don't know what's going to happen next.
Right, that's it. It's just, it's uncertain. I think we can replace that word uncertainty with anxiety, right? I mean, it's really the same thing, right? When you think about being anxious, you're probably not anxious because you know exactly what's going to happen. You're anxious because you don't, right? That's really what it is. And so it's the same thing. And if you look at somebody who has a high level of anxiety, they're unsure about what to do, right? They don't know what the next step is. And they're just living in the fear of the unknown, right? And I'll just bring out another point here. Mark and I wrote a book, gosh, what was that, last year or 2 years ago?
Oh, it's over 2 years now.
Yeah. So we wrote a book, and we titled the book, Break the Glass, Fireproofing Your Retirement. And the reason we did that, in the forward of the book, we explain this. But when there is a fire, that's a panicky moment. That's an anxiety-inducing moment, and it's uncertain. And it can be unclear as to what you need to do next to solve this problem. Of course, you reach for the fire extinguisher, but there are people to save, there are things to save, there's evacuations to be had. Where do we go? What do we do? There is a lot in that moment that is uncertain and creates anxiety. And so we named it Break the Glass, because you have got to take a step towards safety. And in a fire, that's the first step. You grab the fire extinguisher. Now, we can't control the market. We can't control the policies. We can't control the tariffs. We are not in control of any of those things. But as an investor, you are in control of whether or not you create a plan. Yeah. You are in control as to how these things are going to affect you. And so that's why we're bringing this up, is you've got to break the glass. You've got to make a choice. If you're working with somebody and it's not the right person for you, it is time to take action. If you don't have somebody that you're working with, it is time to take action, because you need that certainty in your life.
You know, I love the fire analogy, because, you know, we all grew up when you would go over just your regular safety habits, have a plan when it comes to a fire.
Mm-hmm. Right.
You know where you're going to go as a family. If you're in the home and it's ablaze, what do you do if the room is full of smoke? I mean, there's a plan within a plan, and then the result, the goal is to get out of the house safely. And you can kind of compare that to everything we talk about when it comes to having a retirement plan. How do you get out of this safely?
Right. And, you know, I mean, you think about an earthquake, right? We're all living in fear of an earthquake, right? In the ring of fire and all these things, right? So in that circumstance, what do you have? You have an emergency kit. And so with that emergency kit, it sits there at your house and does nothing until you need it. But when you need it, you really need it. And it's the same way with a fire extinguisher. It's the same way with certain investment tools. They stay in your portfolio to create safety and to make sure that when there is an emergency, you can be taken care of. But that comes from having a plan.
Yeah, in fact, there's a quote in here that I think is really important to touch on. We know that Jerome Powell is the Fed chair, right? He controls, or the Fed controls, really money throughout the world. And he makes a statement because of the uncertainty we've been talking about. He's still worried about inflation staying persistently higher because of these tariffs, right? But then he says it's also stoking fears about a dynamic of stagflation. Well, what is stagflation? It's higher prices but slowing growth. And then he goes on to say, you know, it puts him between a rock and a hard place, because what does he do? Does he lower interest rate because the economy is tumbling, or does he keep the rates higher to deal with, you know, inflation? So again, it's one of these darned if I do, darned if I don't scenarios, and if you guess wrong, it can be bad. And so again, what's happening right now couldn't be a better reason why we need to have a plan, so that when these type of things happen, we're not going to really be devastated and have to learn from the school of hard knocks.
Right.
Yeah. I mean, you want the calm, right? You want the calm in the middle of what is a storm. And right now it's a financial, economic, market storm. Having a plan, working with fiduciaries, mapping this out, that's the calm we're talking about. Mark, we've got spots on the calendar with Elevated Financial Management, and they are complimentary appointments. Walk us through them.
Yeah, so please, if you're listening today, pick up the phone, give us a call. Maybe you're getting ready to retire from Boeing, or recently have, or any of our wonderful companies in the area. We've talked about uncertainty, right? Please pick up the phone and just give us a call. All we want to do is have a conversation. We want you to know you're going to leave your checkbook at home. We haven't decided if we can even help you or not, or vice versa. And again, we just want to have a conversation. We don't want you to feel there's no pressure. What you're hearing today is what you'll hear when you come into our office. We're the same guys sitting, you know, at the radio, you know, microphone now as we are if you come in and sit in our conference room. So let us help you put together a plan where you're going to know more about taxes, you're going to know more about Medicare, Social Security, but please let our team help you put together a plan that's going to make your retirement successful and not turn out to just be a fairy tale.
Yeah, and remember, when you come in, Mark loves the headphones, but he will not be wearing the headphones. I mean, we do the radio show with the headphones on. He likes them, keeps his ears warm, but he will be headphone-less during the appointment. But again, these are cost-free. There's no obligation. There's no risk involved. It's about finding out about you. Finding out about what you want out of retirement, those goals, and then creating that plan. You're going to walk out with a written financial plan, and there's no obligation. All you've got to do is call the number, 866-668-3625. That's 866-668-3625. Now, if you've saved $250,000 or more towards your retirement, now these strategies are going to work best for you. But again, it's about confidence as you move to and through. There's so many of you out there that are sitting on portfolios, and you've done really well. You've saved really well, but you don't have a plan. This is an opportunity to kind of see where you are and maybe get the ball rolling. And then if you are halfway down the path, we always say, look, if you're not being communicated with, if your appointments are getting moved around and you're getting frustrated, it's okay to get a second opinion. Call right now and grab one. 866-668-3625. Again, the number, 866-668-3625. We've got more Elevate Your Wealth coming up on the other side. We're going to get into 4 questions retirees should ask themselves about their investment allocations. You don't want to miss it. That's all next on Elevate Your Wealth. Welcome back into Elevate Your Wealth, again powered by Elevated Financial Management right here in Seattle, and that's exactly where you can find our hosts, Mark Stimpson and Casey Elkins. They've got 42-plus years combined experience in the retirement planning business, helping their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick, and I tell you, we get into the latest and the greatest when it comes to retirement articles, things that catch the attention of our advisors, and we are sharing that information with you, but also just talking about the importance of being ready for what is your postseason, your retirement, having a plan, and we give you a platform. We give you an opportunity to grab a complimentary appointment to talk about where you currently are. And a lot of you are just sitting on portfolios, maybe just as many have something going on but need a second opinion. You can grab an appointment at any time by calling 866-668-3625. That's 866-668-3625. Grab one of those appointments right now. All right, so you guys saw this one from the Wall Street Journal. 4 questions retirees should ask themselves about their investment allocations. I mean, I think it's self-explanatory on why you picked it, but guys, why'd you pick it?
Well, I think these items are really important. Wall Street Journal, of course, trusted resource. But these questions are good because it just helps to get people thinking. And I guess that's what's so important, right? Is we really like articles that help educators or help investors be educated, help them to think about where they're at. And so maybe before we dig into this specific article and the 4 questions, there is somebody that comes to mind that we met with this week. And, this is somebody who started asking himself questions, and that's kind of why this comes to mind when we're talking about questions that retirees need to ask themselves. So we had a gentleman came in, listened to the radio show, or maybe he saw us on TV. I don't remember actually which one, but either way, he works at one of the, he's an owner actually at one of the biggest electrical firms in the area, a primary there with them, and really sharp investor. I mean, he's done very well, intelligent man, not only knows his field, but also studies the investments and has done a nice job. And so he came into us. He's got a group that he's working with currently, or was working with, but he came into us, wanted a second opinion, just like we talk about all the time, getting a written financial plan. He's 67. He's going to work for a little while longer, but he's going to have a phenomenal retirement. And we were able to kind of show him a few things that he didn't know about his investments. He was able to see, based on the analysis that we had done, that he was taking more risk than he realized. the investments, although he had quite a few different investments, they were actually highly correlated. So the different investments that he had, although they have different names, were actually kind of performing in the same way. And with the recent market volatility, that really started to show the cracks in what he's had going on. And so we were able to show him something different, just to bring something different to the table for him, and bring in the other parts and pieces that we talk about, planning for Medicare and long-term care, and there's a lot to it. And so it's not the craziest story that we've ever shared on the show, but I think what's so key about it is that's who we work with day in and day out, right? Yeah. I mean, he's somebody that represents a big piece of the folks that we work with.
Yeah, in fact, he has a very highly concentrated position with company stock. And we have, we mentioned this maybe a few shows ago, but that can be both good and dangerous, right? And good company. But I think, Boeing, we know that was the main driver of the Dow forever, and especially the last decade or longer now. And, we had a client that had put all his money in Boeing stock. And when that door flew off of that plane and the stock began to tumble, it couldn't have been worse for him, because it tumbled at the time that he was planning for retirement. And he lost close to 60% of what he had built up over a almost 45-year career. And then on top of that, he was going to work 3-4 more years. And right after the strike was settled, he ends up getting his pink slip, right? And then so he now needs to turn on income, and he lost a massive chunk of it because of the stock position that he was holding, and it was a great company. So again, this is where planning matters, right? And we're not saying we love Boeing, right? We all do. My wife's family all work there. They're all retired from there. And the bottom line is, though, when you own one stock and you're really betting the farm on that company, it can backfire if something bad happens. And that's a good example. And this client we're just talking about, he has some great company stock, but it is one stock. And if something were to negatively happen to this wonderful company, it could create a real problem for him down the road.
Right. And I think that, the story that you just shared, Mark, I think that really reflects a lot of what we talked about today, which is that uncertainty, right? Yeah, and I think that's it. It's that anxiety, because I think deep down, a lot of people know, a lot of people feel that something isn't quite right with their 401k or their IRA, because they see the volatility. And that is masked by the fact that the market has done well for the last 12 or 13 years, right? So there's those type of returns that the market has brought for the last, like I said, 12 or 13 years, kind of mask the problems inside of a portfolio, right? That those type of returns kind of shield us from the cracks that might be in the plan. But when we see the volatility like we've seen recently, that brings to the forefront real quick what might be lacking in our current plan. And I think that's really important. If you're experiencing that right now, it's time to take a look.
Well, and what I'm hearing, and again, that's a great story. You've got somebody that's got a plan in place. They feel pretty confident in the plan, but they come in and they talk to you about it, and you can see the cracks, and you explain the cracks. It's a different point of view. It's a different set of eyes on what you're doing. We get so set in our ways when it comes to our routines, our planning, and maybe we're managing it ourselves. Maybe we're just kind of halfway keeping an eye on our portfolio. But you have somebody take a look that does this on a daily basis. And it might not be this huge change, but it might be just a little tweak that could make a huge difference in your retirement. So a different point of view, a different set of eyes, again, a second opinion, an opportunity to have a conversation about your retirement. You can grab an appointment at any time with Elevated Financial Management. If you've saved $250,000 or more towards the retirement, again, these strategies are going to work best for you. Call the number, 866-668-3625. That's 866-668-3625. All right, these questions that retirees should be asking themselves about their allocation. The first one, my current stock bond mix reasonable at my age? Obviously, that's an individual conversation.
It is. Yep, it is. And again, right, it's based on age to some extent, right? That's kind of the first piece is, so from an age perspective, how much risk am I taking? And really the reason it comes down to age is because you do need to become more conservative as you get older because you're closer to retirement. And then as you age beyond that, you're already in retirement, right? So the sequence of when you experience negative years in your portfolio can be absolutely devastating to a successful retirement. So you want to make sure that you've got the right stock bond mix, that it's appropriate for your age, and that you're not taking more risk than you thought you were. And I think that's really important.
Yeah, and the second question I think is really, really important. Do I have personal reasons that call for a different allocation?
Yep.
And I love what this says. Individual circumstances are crucial to decisions about allocations. A central concern, and boy, we say this to every client, is whether retiree will rely heavily on a nest egg for income or has other sources if they're fortunate enough to have a pension or an annuity or other assets that could be sold. Because if you have great sources of income, you can afford to take more risk, right? That they've got more money in the red bucket that we can swing for the fence because we know the green bucket, which is in our office is what creates income, is taken care of. So that takes a lot. Again, if you have purpose for those dollars, whether it's the yellow bucket, meaning liquidity and bank money, green money for income, and then red money for long-term growth, if those dollars are specifically set up to do certain things, that's what creates success. We don't want to be creating income necessarily from all of our red money in our stocks, right? If we don't have diversification, it can come back and create a big problem for us. And that's why so many people could end up running out of money because they don't have the true diversification that they truly need.
Right. And then kind of rolling into our third question, do my allocations reflect my current market views or a long-term strategy?
Yeah.
This is really important, right? We've talked about this before. It's called the focusing illusion, and what you focus on becomes bigger. And if you are living in the moment here and now, watching the stock market do what it's doing currently, that is going to freak you out. You need to have a longer-term approach, and you need to make sure that that longer-term approach fits where you're at in your life. We're talking about a 20 or 30-year retirement. That's something that we cannot take lightly, and the allocations have to be set up properly for. And then number 4, Mark?
Yeah, and I have enough diversification within each portfolio? And I love this statement. It says, tech stocks have led markets higher in the past few years, so it might be tempting to tilt towards such securities, right? And we see that when we do every analysis that you do, when we use Morningstar or Quanti to look at a client's holdings. And we know that NVIDIAs of the world, the Microsofts, the tech world has really driven the market in a lot of different ways. And we got to be careful because we don't want to slant toward that and put too much in that, NASDAQ bucket, you might say. So just keep that in mind. And I think Casey's got an offer here that everybody's going to want to listen to.
Yeah, as we go through these questions, as we talk about our client story, if that's raising more questions in your mind, if you're trying to figure out how you can be successful in your individual retirement, this is why we offer what we offer. So pick up the phone, give us a call. We will put together a written financial plan, custom tailored just for you. We'll talk about your stock bond allocation. We'll talk about pensions that you might have, annuities that you might own, the investments that you already have. Are they appropriate? Could they be improved? What are taxes going to look like? What will Medicare look like? Don't hesitate. Pick up the phone. Call us now.
These are complimentary. Call the number 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number. Again, there's no obligation, meaning you're not agreeing to become a client. You're leaving the checkbook at home. This is a test drive of elevated financial management. Call right now, 866-668-3625. Another edition of Elevate Your Wealth is in the books. For Mark and Casey, I'm Morgan. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.